Hey guys, it's Doug the Retirement Guy. Unbelievable announcement. Round Hill Investments introduced 5 new ETFs, all weekly paying income. This is getting crazy. Um, this is not just, honestly, I have to say, this is just 5 for today. They introduced one yesterday that they switched from monthly over to weekly. It is just going crazy out there. So we're going to talk about those today. They all went live today. We're watching the performance and seeing what's going to happen here. So let's get into it and show you guys what's going on. The 5 new funds that Round Hill Investment is opening up, they're all paying weekly pays. It seems like Round Hill's trying to change every one of their funds properly into weekly pays. And if you watched our video earlier, you'll see that they switched from weekly pays and they've even reorganized when they pay, trying to set this up that you can actually get money every single day from Round Hill. Talked to them, they got some information. They said pretty much the game plan that I read between the lines was they're trying to set it up the Round Hill to be the king of weekly pays, and that they want to make sure that people will always go to Round Hill so they can set up those daily paying types portfolios. So what did they introduce? First off, they did a weekly pay of Amazon. The next one, they did a weekly pay of Berkshire Hathaway. The next one will be Robinhood. They also did one on Meta, and they also did one on Netflix. Now, some of these you may come back and say, well, what are you talking about? They already have one from Amazon. They already have one from Meta and Netflix. What are they trying to do? Well, let's get into each one of them and I'll show you. They all have a common thread. They're all set up a certain way, and it really gives you some decent information of what they're trying to do with these. So let's take a look at the Amazon version of this one, AMZW, which is the weekly pay Amazon. It opened up this morning at $49.40. It's going to close about $50.48 for a $1.08 increase. They are investing directly into Amazon, and they do have a operations or expense fee of 0.99%. Very common for weekly traded stocks. So the Amazon portion, the Round Hill AMZ weekly program, basically they're trying to get 1.2 times or 120% of the calendar week total return of Amazon common shares. And they're doing that through basically the selling of options. And they're trying to do this with very clearly with the put options, call options, every which way, trying to sell their inventory, putting it out there and getting people to buy it on the calls. So the positive is and the biggest twist that they do is the weekly distribution. Okay, so they're doing a weekly payout of their profits and so on in a weekly distribution. Enhanced exposures targeting 120% of Amazon's weekly performance. So they're doing the powerful combination of two things. They're trying to get you the potential of the growth and that of Amazon stock that they're doing through their calls, and also adding in that weekly income. So one of the things that threw me a little bit though is they already have a fund out there doing this same exact thing. So why would they add a second? And that's the confusing part to me. So here we are showing you the AMZW compared to the AAPW. AAPW returns, they have a 35.6% dividend return rate. So I'm assuming that should be about what AMZW should be. But the kicker to it is they've been down 11.38%. And they're both investing directly into Amazon. They both have the same exact 0.99% expense fee. But look at the chart of AAPW. You know, it started off the same way, back about $50 a share. And it did go through the April and the March Madness and then the April tariffs, but it hasn't really recovered. So it's down to $34.37. So my real question to you is, why would you invest into AMZW when AAPW is like on sale at $34 versus the $50 that you have to pay for the new fund? We actually have been tracking AAPW in our weekly dividend and weekly performance of weekly paying stocks, and it's not a great performer. It hasn't done well. So it's got me scratching my head a little bit and got me on guard of like, what are you trying to do, Roundhill? You got two funds doing the same exact, almost like two trains on the same tracks. Who's going to get there first? I would really have to go with AAPW because they've already got a track history. They've been through some troubled times. And if anything, I would say they're on sale. But just a word of wise, and just throw it out there to know that we already have it. So we take a look at the next one, and that is going to be BRKW, which basically is investing in Berkshire Hathaway. Okay, that opened up at $49.94. It's going to close about $50.27. I don't know of anyone else doing this type of fund, that they're actually investing directly into Berkshire, and they're doing expense of 0.99 again. So this is going to be the common thread. Every one of their weekly distributions are set up to do this. They're trying to get 120% of the performance of the calendar week in the Berkshire Hathaway common shares. So with this, they're going to give you that weekly distribution that's paid out every week. It's going to give you the enhanced exposure of targeting that 120% return. And it gives you the combination of generating nice big income along with giving you that weekly income return. Since no one else really is out there, the only closest one that if you wanted to say was there would be Omaha. Omaha is definitely going to be a lot less expensive of a stock, but it's not weekly. Omaha is not a weekly payer. This will be a weekly payer, but already we kind of like this one may be something for us to watch. A next one that they've put into this is going to be WHOW, and that is the Robinhood, basically the weekly paying. It opened up today at $50.66. It closed at $52.19. Nice, impressive first day operation. It does invest directly into Hood, which is the Robinhood stock trading program. And their expense 0.99. Again, we're going to go back with the 120% calendar weekly total of Robinhood's markets common shares, paying out weekly, and giving you the 120% of Hood's weekly performance. Hood provides both that common stock and the weekly power together in one fund. Again, I don't know of anybody who's doing Hood. So, and I've looked at the Robinhood's total return, and their stock is doing fairly decent. It's got some good runs, got some good legs to it. So this could very easily be a very strong one to watch out for. The next, so let's take a look at the next one. That's going to be the Meta, which is the Facebook weekly paying METW. Now this one opened up at $50.36. It closed at $50.08, so it had a little bit of a loss there. It is directly, again, investing into the Meta regular common shares, paying an expense fee of 0.99%. It sounds like a broken record as we go through this, but they've set this up, paying weekly funds and trying to get the 120% of the calendar week's return. So weekly distributions is what they're promoting and advertising, and then the enhanced exposure gives you that 120% of Meta. Combine those two together, and that gives you the powerful combinations of both single leverage stock and weekly income. Now, to show you how crazy things have gotten, and sometimes you get out of whack, I thought they had a weekly paying Meta. And so I started searching, and I'm like, I know they have it. I know they have it. To come to find out, my brain is going so crazy with all these weeklies. The one, it's actually a Yield Max that actually has a weekly paying Meta. So my hat's off to Roundhill for doing certainly that. Now we get into the next one, which is the NFLW, which is the Netflix weekly paying ETF. This one opened up at $50.31. It's going to close at $50.58. They are investing directly into Netflix. They are paying an expense fee of 0.99%. So, repeating of the record, they are now taking the Netflix package. They're paying weekly. They're going for the 120% of the weekly performance. And then they have the power combination of those two together. So, again, another nice, strong piece of Netflix being able to buy Netflix and getting some dividends off of it. What will we be doing? Well, first off, we'll be adding these to our weekly paying portfolio. If you haven't seen it, we have been tracking for the past 3 weeks. We bought every one of the weekly stocks. We did not expect the companies to be adding in so many as we go through. So that you can get the link down below of the video that we have, the current video for that. Comes out every Saturday. We give you the performance of each one of the stocks and tell you what's going on with each one of them. So what we'll end up doing here is we will be investing $1,000 into each fund to watch the weekly performance. I will tell you this up front, we will probably not get it done this week. We will get it done next week to get that into the ball rolling. Plus any other new weekly stocks. I know right now we are tracking at least 8 more weekly paying stocks to hit the market. First off, the people, are enjoying them and loving them. They're loving the returns. They're loving the big dividends. The companies are loving it. They're getting their extra percentage out of it, but they have to perform. And that's what we're proving here is that you have to perform to be able to do this on a regular basis. So I put it on here. What's Doug's watch list? Well, my first one is going to be the Netflix. Netflix always performs well on the individual stocks, buying it itself. Every fund that I've ever watched that was a Netflix program gives a nice solid return with a decent dividend. So I'm excited to watch for this one, especially out of Roundhill. The next one is the Berkshire Hathaway. That is such a solid stock, but it's so expensive to get into that this could be the best way to get returns from that without putting thousands of dollars out there. And then my final third one is going to be the Robinhood. Again, I don't know of anybody actually doing this and have never seen it. And Robinhood shows to me that it's a runner. Like I said earlier, it's got some legs, it's got some strength. So we're going to want to make sure we stick. Probably keeping focus on these 3 for sure. We already seen what Amazon's doing and doesn't really perform as well. So, 4 out of 5, not bad. We pretty much had some good answers to it. Guys, it's Doug the Retirement Guy. I hope you like what we're doing. Hit that like button. Don't miss any of the things. There's so much going on with weeklies. That's what we're here for. To help with your retirement and cover stocks. And right now the big talk is all weekly, so that's what we've been talking. Hit that subscribe button. Don't be afraid to be there. Comments. Tell us what you think of these new 5. And tell us what you think about the weeklies. I think the weeklies are going to turn out to be the future of stocks. So again, we're doing everything to help grow this channel, and we're trying to help you grow your pocketbook. We'll see you next time, and we'll have more information for you on all these stocks.